The company being analyzed today is Websol Energy Systems Limited. The company sells solar cells and solar panels. In the last 1 year, the stock price has declined by a miraculous 39.49%. So, we're going to analyze the company's financials, what the company actually does, and its future growth plans. Let us begin. First, we have the historical financials. One of the strangest, wildest financials you can see here. So, first of all, we have revenue. Okay, we will start with the revenue at the right hand side. Revenue was 213 crores in fiscal year 2022, fell to 17 crores, then rose up to 25.86 crores in fiscal year 24. Then 2025 rose up to 575 crores. So why did it decline so rapidly? We will cover the reasons later. Net profit. The company went from 9.67 crores of net profit in fiscal year 2021, massive losses in fiscal year 23 and 24, 120 crores of losses in fiscal year 24, and rising up to 154 crores of a profit, net profit in fiscal year 2025. EBITDA margin, EBITDA margin went minus 74% in fiscal year 2023, but then rebounded to 43% EBITDA margin in fiscal year 25. Okay, take a look at debt to equity ratio. Lower this, the better. This went this went a miraculous 1.7 times. Okay, in fiscal year 24, declined to 0.55 times. Return capital employed went minus because of negative profits and went 50% in fiscal year 25. So, all of this indicates massive decline came in 2023, 2024, then a massive turnaround came in fiscal year 2025. We will discuss the reasons for the losses later. Now, right now, what it's looking like in the first 6 months of fiscal year 26, revenues were 385 crores. Okay, these are the latest earnings, which is a 51% increase from the first 2 quarters of fiscal year 25, which was the turnaround year. EBITDA margin also increased to 45%. Net profit margin increased to 28.9% on the latest 2 quarters of earnings. Okay, quarter one and quarter two. Quarter three has also come about. It has also been released, and they were good earnings. Okay, they were good growth basically. Growth was good. What does the company actually do though? Started in 1990 with a plant in West Bengal. The company has current solar cell manufacturing capacity of 600 megawatts, module, that is panel manufacturing capacity of 550 megawatts. Okay, but in October 2025, they started an additional 600 megawatts of solar cell. So right now their actual solar cell capacity is 1200 megawatt. Okay, interestingly, you see this, the current technology part, it's written monoper. Okay, but in India and around the world, TopCon is the technology being used. So monoper is a type of technology, TopCon is another type of technology. All over the world, I think it's in India also, TopCon technology for cells and modules is being used. Okay, but the company is still using the older monoper. Both have the, you can say, credits and strengths, but TopCon is generally seen as better, while monopod can be seen as more affordable. Now, this is the effective utilization of their capacity. So what percentage of capacity is being utilized? You can see here in, this is unit 2. See, in solar cells, unit 1, unit 2. Unit 2 is the latest, the 600 megawatt recently issued, which had a 51% capacity utilization. The latest, you can say, line, the 600 megawatt is already being utilized about 51%. And you can see 95% is the existing one. So that's a good thing. The existing one is getting utilized. Then modules, solar panel capacity has seen lesser utilization but is rising. In October and November, it saw 66% utilization of modules. You can see it was lower before. These are some of their major clients. We got Raison Solar, Goldie Solar, okay. We got Oswal, see Oswal, I think Oswal Pumps, Panasonic, we got Reddington Solar, and many other, I think energy companies are the big one. Okay, these are the companies, many of them, I believe they install solar panels. The Websol will make them, and these companies can, their clients can install solar panels, or in the case of Oswal, Oswal Pumps make solar pumps, which need solar panels. So they may even buy solar panels from Websol for their solar pump product. Now this is the big thing. Websol's expansion plans, these are plans, these are not current, but their plans are absolutely massive. So this is current year, okay? Current year means January to December. Okay, so in current year 2025, the company had 1200 megawatts of solar cell. The gray one is solar cell, and 550 megawatts of module or panels. By current year 2027, that is December 2027, December 2027, and company wants to have 3200 megawatts of solar cells and 2550 megawatts of solar modules slash panels. Extremely massive expansion. Then by current year 2028, that is December 2028 end, they want to again expand the total facility capacity to 5200 megawatts of solar cells and 4550 megawatts of solar modules. Absolutely massive expansion. And basically, this expansion is going to come through one single plant. They're making one single plant or 4 gigawatt. There's going to be one single plant with 4 gigawatts of cell plus module. You can notice you add 4000 megawatts to this capacity, you get this capacity basically. Okay, they're having one single plant. They're going to make it in phases. It's going to have both modules and cells. And you can notice they're mostly going on cells. Like many other solar companies, they go on modules, they go on solar panels. This company is going cell bigger. The biggest thing is the cell, then comes the modules. So that's a bit unique thing. You can see Wari Energy, you can see Premier Energy, you can see Vikram Solar, MB Photovoltaic. They are going more on the modules first, then cells. They're also going to cells, but Websol, their bigger thing is cells other than modules. Now, as I was talking about, their 4 gigawatt integrated facility, they required 3,000 crores of investment. And the first phase, June 2027, will be the commercial operation date. Okay, it's going to come in phases. So some portion of 4 gigawatts will be made in one phase, second phase, third phase. June 2027 is the commercial operational date. It's, I believe, in Andhra Pradesh. So they already have an MOU signed. Land is due diligence ongoing. Land due diligence is ongoing. They're on advanced discussion with the technology partners for all the equipment to be needed. And I think Andhra Pradesh government has finally given approval. In a media release, they've said that Andhra Pradesh government has already given approval. Now, this is an update on the 600 megawatt cell line, already started in this. Construction started December 24, production started September 2025, very recent, and complete ramp up to be expected in December 1. Okay, and capacity utilization, we already saw it within 60% utilization in November 2025 alone. So, new line, extremely new, and still getting utilized. Now, what was the massive decline? Okay, look at this. Okay, massive decline in revenues, massive decline in net profits, massive decline, of course, in EBITDA. What happened? So the reasons can be found here. It's not the entire reason in the paragraph, but we can make out the reason. This black line performance fiscal year 24 says the revenue from operations increased by 50% to 25.86 crores during fiscal year 24 on account of resumption of operations with superior technology following an enforced closure. They are saying, see, revenue increased from 17.22 crores, 25 crores, but the decline came. Why? Because an enforced closure that closed down their production, that deliberately closed down their production in order to have superior technology. So earlier their operations, this 200 crores, 150 crores operations were occurring because they were selling products using an older technology. They saw the older technology, they saw it was old, they saw the new coming. So they got the new technology, they fitted it into their plants, but they had to close down the operations. They fully closed down or almost fully closed down their operations, which led to this massive revenue decline. But then they restarted with the newer technology slowly and slowly, which led to the 25.86 crores of revenue coming in later. But the net profit declined. Okay, so the main theme is they closed down their operations deliberately in order to update to the new technology or to update their plants. Then performance. Let's read this. First of all, the company reported a higher loss on account on impairment of old assets following the decision to graduate to a superior technology. They decided to graduate to a superior technology. So, impairment of all assets. What is impairment? Impairment in accounting is a permanent reduction in the value of an asset. So, their older technology, they decided they will not use it. They had to deduct on the value of it. Not like they don't have to pay out that value, they don't have to pay out that reduction in value. But in the accounting sense, it will be treated as an expense. So impairment of assets will be treated as an expense on the profit and loss sheet. That's why net profit declined by a horrible 120 crores. 120 crores. And why did they have to impair? That is, reduce the value of the old assets because they were not using it. They were not using it. So, yeah, let's read the value intact impact section. The resumption of operations with a superior technology will strengthen the company's growth engine. Okay, the resumption. Okay. So they resumed their performance, resumed the operations. Then let's read this. The company's EBITDA margin remained negative on account of discontinued operations that would graduate to superior technology. Yes. So discontinued operations with their older technology, one reason. Second, impairment of the assets, so massive losses. Third, revenue decline because again they had discontinued operations in order to adapt with the superior technology, in order to upgrade their plants with superior technology, and that leads us to the original massive increase in revenue, which continues till today this, by seeing this. The EBITDA margin, profit after tax margin continuing in fiscal year 26 first half also. And I think I forgot to cover this. These are the cash flow from operations. So fiscal year 25, the company produced 167 crores of cash flow from operations. And in H1 of fiscal year 26, they produced 132 crores. In the recent few fiscal years, they have shown really good cash flow generation, which is pretty surprising. Okay, it's good. It's good. Then return equity, they produced 67% return equity in the first 2 quarters of fiscal year 26. So very recent earnings, they produced a good return equity. 67% of return equity is really nice return equity actually. Interest coverage ratio went from minus 9 times to 10.99 times. Interest coverage ratio is really important. If it's less than 1 for any industry, that can be concerning. Less than 1 interest coverage ratio can be very concerning. But 10.99 is healthy and it improved to 17.48 for the first 2 quarters of fiscal year 2026 or H1. Same thing. Return capital employed again rising to 68.99% for the first half fiscal year 26. And net debt is declining. What is net debt? Total debt minus cash and cash equivalents. Okay, that's a definition. Lower this, the better for the debt in terms of like debt amount and what else. And you can see decrease from 183 crores in fiscal year 24 to 65 crores in fiscal year 25. And in H1 of fiscal year 26, it's 92 crores. So it actually rose, but still lower than, yeah, it rose from fiscal year 25's end to 92 crores, but at least interest coverage improved. Let us see how the company does in the future, and seeing with the expansion plans, let us see if they can execute these expansion plans very, very well or not.